Yeah, go ahead.
Make your reasoning. What happens? Go through all the questions, please. Do it. What is the first question? Is an adjustment needed? If we don't do anything, are we rewarding or punishing the existing team? Are we giving them a favor or a punishment? Punishment, how? So here, the job is done. The employees have performed the job, okay? And so far, and they will be paid, and the payroll will be prepared in January, next year. So the current executive team are punished accordingly.
The current executive is getting rewarded because they got not as much as the labor of the employees, but then paid out. So.
Yes, but not about paying. Pay will be done. Yes, it is their favor because they have consumed the job, but not the fact that they did not pay. How about those who pay in advance? Are they rewarded because no? Because they have never been charged. They have never been charged for the job done. There is no wage expense that be recorded for that at all with regard to this last week of the year. So they are given an undeserved favor, right? Because they have consumed the job, but they have never been charged for it.
Could you specify, clarify more what you mean by like charge?
Charge simply means putting an expense and that in their income statement. That is charge.
Under the name of like the asset.
Yeah, under the income statement of that period. That is charge.
Right.
Being charged means when you make a journal entry where you debit expense, you are charging the executive.
That affects the income statement, that affects the
Exactly. Income statement, net income, bonus. Okay? At the end of the day, it is all about the bonus of the executive. So what happened here? Do you see it? So the job was done. Employees have performed the job during the last week of December. Okay? So far, so which means the executive team consumed their job, right? They consumed that. They benefit from the job which is done. But the payroll is going to be done next year, on January next year, which means the expense, if we don't do any adjustment, it is the team of next year, the executive team next year that will pay for it, that will be charged for it. And that is not fair. We have to charge the current executive team because they are the one who consume the job. So if you don't charge them, you are granting a favor for them, undeserved favor. That's why you have to correct this, to adjust this by charging them for this. So now the question is, okay, we agree there is a journal entry needed, adjustment needed. Is this about an expense or about the revenue? This is the easiest part of the process. Clearly, wage expense. Should we rise expense, which means increase it or decrease it? We agree that we need to charge them, which means increase the expenses, right? Increase expenses mean debit or credit? Debit. Expense increase on the debit side. So we debit wage expense. Now, what should we credit? Okay. The credit side, it should be either an asset or a liability. If it was an asset, it would be a decrease of an asset. Is there any asset that decreases? There is no cash. We are not going to pay now. Now we are just making journal entry. Do you see any asset that will decrease here with this? Do you see a liability that will increase? Yeah, wage payable. We need to pay this work, the job, the fact that they have performed the job, it creates a liability. There is a debt. We have to pay them. We need to pay them. That is a debt. That is payable. So that is a liability on the credit side, and that liability is wage payable. No calculation to be done. The number given, just take it as is. Right? Number 7. Okay. Number 7. it says the rent expense figure includes $600 paid in advance for January 2026. So if you see, they say what you see here as rent expense $6,600. The $6,600 of rent expense, it includes what? It includes $600 that was paid in advance for January. Okay, think about this. If we do nothing, so if you consume the rent, it will be consumed in January. We pay for it, it was paid already. If we recognize it as an expense, it is on the $6,600 as an expense. The day we paid the expense, the rent, we credited already, we debited already $600 of rent expense. Okay, so if we do nothing, are we punishing or awarding or giving a favor to the executive team? Punishing them, very good, yeah. Why? Because we have charged them $600 of rent. Why? They are not the team who are going to consume that rent. The common team, the one that they will come in January, are the one who will consume the rent. Which means with no doubt there is an adjustment that will be done. Now, is it about an expense or about revenue? It is about expense. We are talking about rent expense. Is it about charging an additional charge of expense or reducing expense? It is about an expense. Should we increase or decrease it? Because they have been charged $6,600. Why? $600 of that amount is related to the next team. It will be consumed by the next team. So the current team, we need to decrease the expense, the charge. What does it mean, decrease an expense? Debit or credit? Credit. Expenses increase on debit side, decrease on credit. So I will credit salaries expense. Rent expense, credit, rent expense, and debit, what? Debit what? Liability that increases or an asset that increases? Which one? We have already paid already paid. No cash in the adjustment. Never use cash in adjustment entries. Adjustment entries do never involve cash. It is not about making any payment. Very good, prepaid rent. We have to create an asset. Prepaid rent. That is an asset. Okay? So prepaid rent. Why? Because it was prepaid in advance. Prepaid rent for $600. Next, last one. Okay. So the last one. Oops. Income tax for the year should be calculated using a tax rate of 25%. Okay, so we will do the calculation. Before the calculation, income tax, as it is like individual tax, like us as an individual, not a company. When the year is done, when the year 2025 is done, you prepare your tax return and you pay your tax on 2026, right? So same thing for companies. When the year is completed, in 2024, we are 2024, they're going to pay 25% of the net income as a tax, or the income of the pre-tax income as a tax. So now, forget about the calculation. Calculation will come later. Now, just about accruals and about being fair with the team. Now, if we don't do anything, if we do nothing, the team that will pay for the tax of 2024 and will be charged for it is the one that will be running the company on 2025, because the tax return is prepared on 2025, and that is not fair. Even if payment is not done now, we still have to charge the current team that run the company on 2024 for the tax of 2024, right? So an adjustment entry is needed, otherwise we are given a non-deserved what? Favor or punishment? So if we don't charge them for the tax, that would be a non-deserved favor, right? And that is not fair. So they have to be charged for the tax. Okay? So is this about an expense or a revenue? Obviously. Expense, we are talking about the tax expense. Should we charge it or decrease it, increase it or decrease it? We have to charge them. So increase an expense means debit. So we have to debit interest expense, tax expense, income tax expense on debit side. What should we credit? Is that an asset that decreases or a liability that increases? What is this about? The fact that there will be an income tax to be paid in the future. Is that? Income tax liability, very good. Income tax payable, a liability. So it should be tax payable. Okay? Good. Now the amount, the calculation now. It is not given. We have to calculate it, right? And they say income tax rate is 25%. 25% of what? Of the net income. 25% of the net income, okay? Of the income, okay? Or the income, okay? The earning, let's call it the earning, or the earning, or the net earning, or net income, same thing. Do we have this information? So far, no. We have to calculate it, and net earning is the revenues minus expenses. Okay. What we have here on the balance, on the trial balance, are some of the revenues and expenses before adjustment. What you see here says revenue, cost of goods sold, wage expense. All of these are revenues and expenses before making the adjustment. Is this the basis of calculation of our tax, or the after adjustment ones? After adjustment. So we have to update your revenues and expenses. Any account that was involved on the adjustment entry need to be updated first, so that you can calculate the income on which you pay tax. Okay, what I'm going to do is I'm going to copy this portion of the trial balance. That includes all the expenses, of course. Do not include the dividend. Dividend is not an expense. Including all the revenues and expenses. Okay, because we need the amount now. This is the before adjustment figures. It is wrong. So it's revenues and expenses. Copy. And then paste them here, and then adjust them. Do we have any adjustment? We are going to go one by one. Do we have any adjustment to the revenue, sales revenue? I think yes. One of the journal entries includes the sales revenue. Which one? It's number 4. We have credited sales revenue 4,000, which means we have added. This is an increase. So plus. So the adjusted amount. The adjusted amount for this is the unadjusted plus the 4,000 of the journal entry number 4, because we have credited the revenue by 4,000. Okay. Next, is there any journal entry that involves the cost of goods sold? I don't remember. So I think we don't have any journal entry that involves the cost of goods sold. Right? Cost of sales. So which means the adjusted number is the same. Okay, minus 130. Is there any journal entry that included the wage expense? Yes, I remember we made a journal entry that includes wage expense. So it would be, what was the entry? Wage expense. We have debited wage expense and journal entry number 6. Debit means increase. Okay. Are there any other wage expense? No, right? Increase of the wage expense, so plus. So wage expense would be the 34,000 plus the debit we made to the wage on entry number 6. Okay. And then repairs and maintenance. I don't remember. We used this account. And then rent expense, we did an adjusted entry rent expense. I remember we subtracted $600. We credited rent expense, which means minus, and it was entry number 7. Okay, miscellaneous expenses. I will add the supplies, the consumer supplies, because we did not. So this plus, if we don't need to create another account, we just the consumer supplies, add them to miscellaneous. Depreciation, consumer supplies plus 2,400. And then we made a depreciation expense new, which was not here before, minus, because it is an expense. How much is it? Depreciation expense. It was journal entry number 3, and it was $1,000. Okay. We also, I remember, we have interest expense, an expense, so minus. And what was the journal entry that in which we debited interest expense? It was this one, 450. And let's double check to make sure we considered everything. So salary expense, we did not adjust salary expense. Salary expense, it is wage and salary. Okay, so wage and salary together, right? So there is another increase of the salaries expense. So salaries expense, where is it? The first one. Okay, 1,600. Okay, anything else? Did we miss anything? So the first one is done. Second one, supplies, consumer supplies, we did it with the miscellaneous. Depreciation done. This one, sales revenue done, also $4,000. The interest done, and the wage expense done, and the rent. Did we reduce the rent? I think we did. Yeah, done. Now, okay. Now all of our revenues and expenses are updated. Now I can calculate the net income. Simply total revenues minus expenses. Okay. $187,000, and that is what we use to calculate the income tax. Income tax equal to 25% of that amount. 25% of that. So equal again 0.25 multiplied by the amount we have just calculated, and that will go to the credit side also. Okay. We still have next week for the now also in one day you also close the entries. Very easy compared to adjusting entries. And we still have next week to do more practice in the adjustment and closing. Thank you for your participation and for your attention.
Thanks, sir.
See you.